the 4-hour price chart for Super Micro Computer Incorporated, stock ticker SMCI. So as we can see here, the stock price has taken quite a dive here. This is roughly in line with a large number of technology stocks at the moment. Even the broader market, the S&P 500, is experiencing major declines here. So these price moves here are significant, and they really do change the picture for how we're going to be trading this stock in the future. So we do need to identify some important support and resistance levels so that we can use these levels to orchestrate and develop some trading strategies here going forward. So specifically, we can point to, these recent price lows, which have gapped lower and created a significant, vacuum really in this chart. So what we're looking at first here will be this range high to the top side, which did come in just below the 725 mark. But as we can see here, the lower portion of this trading range, which came in at roughly 656, has now been significantly broken. On these 4 hourly bars here, we can see that the new price low managed to travel all the way to 582.40. So this is a very significant distance here in a very short period of time. Currently, we're looking at a price gap of roughly 660 to just above 630, so almost 30 full dollars. In share price gapping activity that has been seen for this stock. So as things currently stand, we do need to start by drilling out here a bit and sort of identifying what this actually means from a longer term perspective. And then we can sort of move in a bit more closely to outline some specific trading levels. So, to start with, we do have to point out the fact that, we've been watching this 660 level in Supermicro because this is the 61.8% Fibonacci retracement of this dominant trending move here. As we can see here, these lows from roughly $300 per share extended all the way to roughly 1,230. And this occurred in a very short period of time. I mean, this was a matter of months. And then, prices did start to decline here, but we were caught here by the 618 retracement going back to the middle of April, roughly April 22nd. So, this is a very significant support zone, both on the historical basis, but also on the Fibonacci retracement basis. So as we can see here, we have sort of devolved here, moved lower, declined back into this region once again, while forming a sideways trading range. And then as that has occurred, and these recent earnings figures that I have been discussing for the last few videos, these are having a tremendous impact. What I've been saying in other videos is that I do think that this trading week is actually going to be the most important trading week of the year, and it is starting to shape up in that way. Unfortunately, many of these moves are to the downside. But there were just so many earnings reports that were released in a short period of time, and then in addition to that, the market as a whole has really been trading under pressure for the last 2 or 3 weeks. So there was a lot of potential here for volatility, and I was trying to call investors' attention to this, because there was scope that we would see outsized moves here. So currently, we have to sort of drill into this price chart here. Now that we understand why this 660 level was so important, we have to sort of move in here a bit so that we can sort of see that, this prior trading range, which was, characterized by a few false breakouts previously. I've covered those in other videos, so I won't get into that too much here. But more recently, we have fallen below. We've started to move below this exponential moving average cluster, with all 4 of the major exponential moving averages now firmly above share prices. So this will be significant here. The first level of resistance now comes in at the 20-period exponential moving average. This is the hourly time frame, so this would be the 20-hour exponential moving average, and this currently rests just below 655. So, as we can see here, a lot of these regions are starting to overlap and show some consistency in the broader levels here. So, roughly now 655 to 660 is sort of the region to watch here going forward, because we are going to need to see a break above this zone in order to start to take pressure off of the downside. The good news here would be the fact that, we do have almost $30 in share price gapping movements here. What this is going to have to mean at some point is that these orders are going to have to be filled. These orders that are sort of caught in the market and have not been filled yet. We're going to need to see this price gap filled at some stage. So, given the fact that this was a downward price move, filling the gap would mean that prices would need to move back to the top side in order to make sure that those orders are filled. It's not really clear that this would be able to happen today because we are trading in the second half here of the Friday trading session. So it does not look like this is going to be happening today. But this is something to keep in mind next week for anybody that will be looking to trade this stock. To the downside, as I said, these new lows now come in at 582.40. So this would be the next level of support to the downside. But in order to really find some stronger support zones, we really have to go back farther here, once again to this 4-hour chart, and take a look at the 78.6% Fibonacci retracement of this dominant trending move that I have outlined here previously. So, if we're looking at this as the dominant trend move here, the 786 retracement is not found until 503.70. That's a very substantial decline here from here still. And I understand, I've mentioned this level a few times now recently. And it probably seemed hard to believe that prices could extend that far, but we're already we're well on our way to that point now that this 660 level has broken. So, this would be the ultimate price target here to the downside. And the reason I have to mention this is because, there are no moving averages in this area. As we can see here, we're in kind of a desert territory here. There's really no technical signal here, which would suggest that a turnaround reversal point is ready to unfold. The best thing that we can really point to at this stage would be the relative strength index reading, which is currently showing a bit of a rollover out of oversold territory. We can sort of zoom in on that a bit here, but it's kind of a weak rollover at the moment. We're seeing a bit of movement out of this region, out of this oversold region, but it's a bit indecisive. I mean, we're moving higher, then we're moving back lower, then higher again, and then lower again. So, there is a bit of a conflicting signal here. We are trading very close to oversold territory, so the potential for much deeper declines seems a bit overextended and exhausted at this point, but I'm not really seeing anything near term here with us in terms of support structures that could support prices. So here's the current market update for Supermicro Computer Incorporated, stock ticker SMCI. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership and start trading stocks with the pros.